Hi guys, this is Dr. Sadasivam once again with you. We had earlier shared a video on how much the foreign portfolio investments have increased in India, but we have not been able to provide data. Now that we have some data with us, which has appeared in the Economic Times, authored by Asutosh R. Sham, correspondent of Economic Times, just wanted to share some of these details for your understanding. Now, we've already discussed that there have been very strong inflows of FPI and outsized market gains, which have driven the Indian equity holdings to record high levels of FPIs. In fact, it is 87% over and above the past year, and we have already breached the 600 billion for the first time. Now, with a fair amount of confidence, we can say that FPIs nearly control a fifth of the total stock market capitalization, which is approximately 20%. Now, if you look at FPIs, let me repeat that, it is foreign portfolio investors. Their equity assets, if you see by the end of 2019, that is on 31st of December, we were somewhere around $300 billion. But now, as on date, as we speak, we've already crossed $600 billion, guys, which means a large part of it is in the year 2020. We suffered a major setback because of COVID, but in spite of that, there has been a 100% increase in FPI assets in India. Now, let me also share certain statistics with you. The Indian equities have delivered a return of 12% so far. Guys, 12% return is the highest, not one of the highest. Let me repeat, it is the highest in Asia, 12% returns, and probably that is because FPIs had made strong gains as the strong stocks rallied. And if you look at, of course, we've already seen how much it has increased from 31 December 2019 levels, because that's just before COVID. We heard about the first patient of COVID in January 21, I guess, in Italy or someone, sorry, 2020. That was the statistics. We are talking about 2020 and how much it has increased in the last few months. Now, if you compare it with other countries, India is one of the biggest emerging market recipients year to date. For example, in terms of receipts, we are going to talk about millions. India has already received approximately $8,000 million. India is actually second, which is very close. It shares it with Brazil, unfortunately, which is almost in the $8 billion, 800 million. And the third country is Indonesia, which is 1,000. Where is 8 billion and where is Indonesia? Of course, India and Brazil, they are, equal this year to date. And Indonesia is very less, and many countries it's negative. Malaysia is minus, Philippines is minus, and host of other. Even China, let me talk to you about this. These are not insignificant countries. If you look at China, there has been a reduction of 5,000 million, $5 billion. South Korea, there has been a reduction of 16,000. All these are compiled by Bloomberg, right? So that shows how much India is seen as a very attractive destination as far as foreign capital is concerned. Normally, we have shared in the other videos also that for any outside country to invest in India, three things are extremely important. One is the trust and faith in the government of India, whoever is running the government, in terms of how judicious they are in using their budget, how well the capital is being used, how well there is ease of doing business, how well corporates are able to conduct business without any fear. That is number one. Number two is political stability, and number three is future outlook of those countries. All said and done, we are all aware that share market prices are slave of corporate profits. right? We have many doomsday philosophers within our own country who keep saying government is not doing, the GDP is declining, people are dying, people are suffering, etc. But foreign portfolio investors, they have reposed too much of confidence on the Indian market and the Indian government, right? Now, some statistics about this FPI I would like to give. The total foreign portfolio investors ownership is somewhere around $3 trillion in the Indian market, which is 20% of the total market capitalization. And it also holds a 43% in the equity assets of institutional investors. Both these metrics go on to show that the outlook of India, especially the corporate outlook, is extremely positive, and more is flowing in the months and days to come. And if you do a small analysis from this year, for example, from the month of January onwards, you can find that the fortnightly flows is one of the highest. In fact, in the last fortnight, there have been more than 2,243 million. That's the level of money that is coming inside. Of course, in between for some fortnights, I think, especially after the first fortnight of Jan and first fortnight of February, of course, the inflows were less because of the news of second wave. But once again, we have risen to the occasion, and the first fortnight of June has already recorded around 2,243 million, which is more than $2 billion, right? Now, let us also look at where these funds are going, because there are so many sectors in the economy, and where are most of the investments going. So, on a rough analysis, clears that approximately 55% of the investments go into three segments, right? We have approximately 1, 2, 3, 4, 5, 6, 9, 8, 9, 10. 14 sectors we have, starting with your banking and finance, software, oil and gas, automobiles, pharma, capital goods, utilities, food, beverage, metals, insurance. And out of these 15-16 sectors, three sectors constitute more than 55% of total investments. Guys, remember, three sectors out of 16 sectors constitute more than 55%. You would be eager to hear what those sectors are: banking and financial services, software and services, oil and gas. These are the three sectors. In fact, banks and financial sector accounts for 33%. Your software services is another 13, which is 33 plus 13 is 46, and your oil and gas sector is about 10%, which takes it to 56. So 56 is shared by three: banking, software and oil and gas. Other than that, remaining 45 is shared by approximately 12-13 sectors, starting with autos, your pharma, capital goods, household, utilities, each of which is somewhere around 4 to 5, 3 to 4%. And then you have food, consumer durables, metals and minerals, insurance, 2.5%, and other sectors which are not counted in any of these, which is around 10-12%. So these are the statistics which have been compiled by NSDL, which is the National Stock Agency, and this is how the FPIs, foreign portfolio investors, their stakes are involved. They are not the ones who will sit in WhatsApp. Their stakes are there in the game. Their money is on the game, and you can be quite sure anybody who puts his money into the game, that is the best vote of confidence on the strength of the economy. And the FPI's investments of $600 billion, guys, in this year is a testimony to that fact. Okay, guys, I will keep coming with more and more videos from the perspective of civil services. It's going to be a very important question. Please remember to put all these data. And for those who are not competing for any examination, greatly benefits corporate CEOs, guys who make presentations, corporate honchos. It can help them when they are involved in commercial discussions, professional interactions. These small things help you a lot. Even for people who are in sales, these small things help you a lot. Okay, guys, I hope you enjoyed this video. If you have some opinions, comments, do remember to mention that in the comments column. I would personally like to go through each one of those comments and reply to you back, guys. Okay, this is Dr. Sadasivam signing off till we meet again. Bye bye. Jai Hind.